Hey, good evening, everybody. Welcome out to the weekly training webinar. Uh, I'm Shade Foray. We do this weekly training webinar, and the topics on it vary. We talk about a lot of different things during different weeks. We've said before, if you have any interest, we're always interested to hear what your requests are. But tonight we wanted to talk about a topic that we sometimes overlook. And I think there is a lot of opportunity there. And really, it's something that I think everybody should understand either way. So, and I know Steve has been battling to get on here. And I'm not sure if he's on yet or not. I haven't heard him yet.
Can
But
you hear me?
oh yeah, I can hear you now.
If I continue to have audio problems, I think I'll just call in with my phone versus doing the online.
Yeah, no problem. But yeah, we can hear you. We can hear you just great now.
Okay, good.
Well,
Perfect.
excellent.
Well,
Yeah, go ahead if you want. The topic we're going to talk about tonight, I know, is redemption deeds. I'm going to let Steve kind of take over though, and talk about redemption deeds from here, and I'll kind of jump in at different points.
yeah, definitely. I mean, tonight we're going to, we've talked about tax liens, we've talked about tax deeds, and today we're just going to go over essentially redemption deeds and really what's involved with redemption deeds. When it comes to redemption deeds, there's not a huge amount of states that do it. And each state is a little bit different. So even though we put them all, 5 or 6, 7 different states as redemption deed states, essentially each one is in a way going to be kind of doing things a little bit unique. And we'll go through and explain what I mean by that as we go through and talk about the different states and kind of how redemption deeds work. But tonight we're going to talk about what are redemption deeds. We're going to talk about what's the difference between a redemption deed and a tax lien and a tax deed. How are they different? What makes them different? How do you bid on redemption deeds? How does the auction work? And also what states use this redemption deed system. So essentially we'll go through and talk about these different aspects tonight. And if you guys have any questions as we go through, like Shade mentioned, be sure to ask in the chat section. We can answer any of those questions as we go throughout and talk about these different things. And then hopefully at the end we'll be able to get on and actually look at some upcoming auctions and some different things that are taking place. So as far as redemption deeds, we've talked about those 3 different tax sale types. We've talked about tax liens, we've talked about tax deeds, and really what are redemption deeds? Well, really what redemption deeds are is they're really a hybrid of both tax liens and deeds. Redemption deeds are a tax deed that is sold with a redemption period attached to the property. So like a tax lien certificate, when you're buying that tax lien, you essentially have a redemption period that the property owner can pay you back. Redemption deed is very similar. Redemption deeds are essentially tax deeds that have these redemption periods attached to the property. So when you're buying the property, unlike a tax lien certificate, where you're just buying 1 year's worth of delinquent taxes, or you're paying off that delinquent taxes with redemption deeds, the opening bid is going to actually start at all of the combined taxes. Now, these redemption deeds, they have redemption periods that range anywhere from 2 months to about 2 years in general. So usually the redemption periods are going to be shorter. In addition to that, redemption periods also offer a penalty versus an interest rate return. And so we'll talk about that and kind of break that down in some of these other slides of exactly what does that mean and what is a penalty rate versus an interest rate return, and how does that work within these redemption deed states. The final point that we're going to talk about is some of these states, for example, Texas is primarily, Hawaii has some counties that allow this as well. Ownership rights can actually be extended to the property owner or to the deed investor, to us investors, during this redemption period. So for example, like Texas, for example, you can actually have ownership rights during this redemption period. So you could rent the property out, you could do some of these different things that we'll talk about as we go throughout the webinar. So,
I was also going to say just something that came to mind. And something that you learn as you deal with different places is that while looking at redemption deeds, I think in the past they seemed like obviously tax deeds with a redemption period attached to them, and that seemed like kind of a downside. But the reality of it is that even buying different tax deeds can be a prolonged experience when it comes to dealing back and forth with the county and some of the legal requirements that they may have to post and notify things when it comes to even stuff like over the counter, to where you could easily be looking at a couple of month period of time, with a normal tax deed state in some cases. So a redemption period of 2 months to 2 years isn't necessarily as bad. I guess as I might have viewed it, years before, having only dealt with certain states. So I think depending on where you're looking at, the period can take a little bit longer than what you might imagine on some tax deeds anyway. So, I don't think you can't really discount redemption deeds due to that time period. I think you have to look a little bit more into it, because in cases like I'm sure we'll talk about with Texas and stuff, some of these states have laws that only that affect different types of property differently, and a redemption period of 2 months or 6 months is really a pretty short time period in general. So anyhow, just thought I would share that.
Yeah, I mean that's a good point. And in fact, all except for one aspect of Texas, which is homestead and farmland, all other redemption deeds have a redemption period that's less than a year. So, or a year. So, for example, Hawaii is a year, Georgia is a year. A lot of these different states that we'll talk about are essentially have a year-long redemption period, which means that, you'll sit back for that year period, but once that year period is over, you've essentially acquired the property. Now, as far as what is the difference between a tax lien versus a redemption deed, Shay, do you want to go over kind of some of the few differences between the two?
Yeah, sure. With tax liens, really, we have an entirely different beast here. I mean, with tax liens, what we have is a lien that's placed against the property, so it still utilizes that whole property as collateral for whatever the delinquent amount is that's owed in taxes. So essentially, the lien is generally for a year's worth of taxes. In most circumstances, a lien consists of 1 year's worth of taxes and fees, and that lien essentially has that redemption period attached to it. And so, investors buy that lien because it pays out that high interest rate return. With redemption deeds, there are things that are different about that. So with tax liens, keep in mind our primary objective with tax liens is to earn, at least in most cases, it's going to be to earn a high interest rate return safely. Okay, so it's to be able to earn, let's say, 18% annually on your money, and to have that accrue, basically, I mean, it's accruing at 1.5% per month every month. It also doesn't have ownership rights, which in some ways, some people are, I guess, more inclined to invest in liens because of that fact. Because there are no ownership rights, there's an additional layer, another buffer there when it comes to the overall accountability, I guess you could say. I don't know. Some people prefer the fact that that you're not actually buying property there; you're just buying a lien against the property, that you're trying to earn this high interest rate return. However, you know they can lead to foreclosure, but 95% of them don't. Which I think is important to remember, that the vast majority of tax liens aren't going to go to foreclosure, that they're going to redeem, because that's the way the system was designed to work. And when they redeem, the investor earns that high interest rate return, and everybody in that situation gets what they want. With redemption deeds, what's primarily different about them is that they're sold like a tax deed, meaning that when we normally show up at a tax deed sale, we're just planning on buying properties that have already been foreclosed on by the county due to delinquent property taxes. So, normally if we're looking at a tax deed, and the opening bid is going to be the total amount that's owed in taxes and penalties and fees. And so what it sells for ultimately depends on the competition at the sale or who you're competing against, unless you're buying over the counter or something like that. With redemption deeds, though, the one difference there is that once you buy it, the property doesn't necessarily transfer ownership yet. In fact, it's like they go through the majority of the foreclosure process, with the exception of actually transferring over the name. And the reason they don't do that is because there are certain things within the state laws for that state that give the property owner some type of a time period there where they can potentially redeem the property. But what it really means for the investor is that you can buy these deeds, and like Steve mentioned before, in some cases you can even take possession of them, but you are also still at the mercy of this short redemption period, meaning you can't actually transfer title. You can't actually sell it during that time period, but that you could do other things though with it. But basically, what it means is that the owner has the ability to redeem during that time period. But if they don't, when it's done, then it's like a normal deed. You can transfer ownership. But if it does redeem, then you normally get paid out, a percentage return, a penalty rate, basically a flat rate. So I don't know if that kind of covers it here, or if there's anything you want to add to that, Steve.
No, I think you hit most of the the major points. I mean, really, with the tax lien certificate, the biggest point that we need to remember is that's just going to be 1 year's worth of delinquent taxes. And we're essentially, we don't have any ownership right. Now, that lien does have, ownership rights if the property owner doesn't pay us back, and we can go through the foreclosure process. But with a redemption deed, you're essentially paying all the delinquent taxes up to that point. So, that opening bid amount is essentially going to not just be 1 year's worth of back taxes, it could be several years worth of back taxes. In addition with that, the bidding methods are completely different. So when you're looking at, even though the interest rates are included with redemption deeds, and that's part of the investment strategy, you really look at redemption deeds more like a tax deed investment than you would look at it like a lien investment. Meaning, we're not going to just go through some redemption deeds and do a little bit of research on a single-family home and purchase that redemption deed at the auction without doing some things like an on-site evaluation or some different comparative market analysis. Like with the tax lien, you're essentially you're 95%, like Shade said, is going to be paid back. With redemption deeds, this is just a kind of a guess from what we've seen, but I would say that, you have a 50-50 shot at getting the property. It could be even higher than that in a lot of places. So essentially, there's going to be a good opportunity. You're going to have a high opportunity of actually acquiring the property, and the way that you bid on the property is just like you would at a tax deed. So even though we have interest rates involved, and that's going to be part of the investment strategy, you're going to really be doing the research like you would with the tax deed.
One of the questions we had here, which is a great question, Donna is asking, how is the ownership of the redemption deed recorded? Which is a great question, because I know it varies somewhat depending on where exactly you're dealing with it. But I know that something that Steve and I remember we looked into a while, because it was kind of a confusing thing for us to figure out, and it seemed like what really happened in a lot of cases, and maybe you can jump in too, Steve, if you have any thoughts on this, but that the county would record basically after the sale, it's like 90% of the process would be completed, but they wouldn't actually sign over the ownership of the deed until that time period had expired. And then once that time period had expired, then it would act just like a normal deed in terms of how they would transfer it. So the ownership would be recorded the same way it would with the deed. The only thing that was really different about it was that time period they forced you to wait.
Yeah. I mean, for most of the states, Texas, Hawaii, a lot of these states that's essentially what's going to happen. They've done everything. They just haven't recorded the deed, or finished the recording process, and essentially, make you the full sole owner. That property owner still, has their right to redeem up until that date. And so, as far as I guess you kind of answered the question with that follow-up as well. Most of the states, the only state that's not going to have that is going to be Georgia, and Georgia's a little bit different. You'll actually go through a foreclosure process at the end. once that year period is passed. But in Texas and most of the other states, the foreclosure's essentially already been done. They'll just go ahead and record, finish recording the document. So you'll actually receive a deed, on with many of these when you participate in the auction. They're actually going to send you out a deed.
Yeah, it's kind of interesting. It's almost like, yeah, in a lot of cases, it's like the property already has been foreclosed on. So it's like the property owner would have already lost the property, but they want to give them an additional time period there in case they can somehow come up with the delinquent funds. But what happens though is that more often than not, the ones that would redeem had redeemed before that point, and therefore that's why I think the percentages change a little bit when it comes to the overall percentage that end up redeeming versus those that don't. But other than that, they're just tax deeds. They're just basically tax deeds. The only thing that's different is just that time period that's involved with potential redemption and what were to occur if it did redeem, which Texas is popular because that percentage is pretty good. It's basically what is 25% annually. That is that flat rate, which is not bad. Really not bad at all when you consider that compared to other investments.
Oh, definitely. And also when you're looking at some of these states, like for Texas, for example, a good portion, let's say 70%, 60, 70% of the real estate that's offered at the auction is only going to have a 6-month redemption period. The only real estate that's going to have that 2-year redemption period, and we'll go into it a little bit when we talk about Texas, is going to be essential farmland and homestead properties. And so homestead properties, are essentially going to be those properties that are owner occupied, their only home. And so, as you're going through and looking at different lists in different counties, that you'll see these different types of properties, but they'll have many properties, any type of rentals, commercial land, anything else is essentially just going to have a 6-month redemption period, which means you're either going to make 25% return in 6 months, or essentially you're going to have the property, you're going to be the owner after 6 months. So it's really just going to be, they're just trying to protect those few property owners in Texas that may be the homestead or a farm. They don't want to have a farmer lose his property after 6 months being delinquent, so they want to give him extra time or her extra time as well for that. But otherwise, that's exactly how it's going to work.
One of the strategies, though, that you can employ in Texas is to look for properties that you think have the highest chance of redeeming. Which you can generally check, if you can see the payment history with the property taxes in the area. You can see if somebody's paying the property taxes off or not, because they won't actually redeem it until it's paid off in full. But that is basically one of the ideas with that, because a 25% return in a 6-month period of time is pretty impressive. I think no matter how you look at it, if those are the ones you're going for, but then also, you also have that high chance of being able to acquire the property as well. I think in Texas, I don't know if it's just me, but it seems like we have a pretty broad range of property. It seems like you have a lot of different types of property in Texas, and a lot of action with tax sales compared to other states. Texas is pretty active with their tax sales, I think, compared to other states. I don't know what your thoughts are on that, Steve, but it seems that way to me anyway.
Yeah, well, and part of that is because they have auctions every single month. When there's an opportunity to purchase at auctions every single month, that's the reason we're such a big fan of Florida, is just because their tax deed sales are every single month and sometimes several times a month. So if you don't win in that particular auction, there's always going to be other chances to pick up property. And Texas is that way. And they also have that high interest rate return, and you don't have to do any of the foreclosure. Georgia, you're going to have to kind of do a foreclosure at the end of that period, and it's a year period at a 20% interest rate. But also sometimes there's going to be, there could be less competition at those sales. We've been able to help students in the PACs pick up some pretty good property. They just sat on that property for a year. Once the year was done, they did foreclosure and ended up picking up a pretty good property for for not a huge amount of money. There, 3 or 4 grand was able to pick up a condo worth about 80 or 90 grand. So there's a lot of opportunity out there, but Texas is definitely one of the most flashy states for tax sale investors because of the fact that there's so many properties available, and because of they really cater to investors to a degree. The only way that they don't cater to investors is by offering them online. But besides that, most Texas is pretty on top of their tax sales.
Yeah, I know that is that I know that is kind of the one downside that they have, just that their sales are all kind of live and in person. But it's also something that you can always make a trip for, out there to Texas too, if it's an area that you want to choose to specialize in, and there are lots of options. That's another
Yeah, well, there's a
advantage
lot
there.
of investors who do that.
Hmm.
There's a lot of investors out there who do nothing but travel to Texas and participate in the Texas sales several times a year. For that exact reason. So when it comes to redemption deeds auctions, how does the bidding work? Well, as we talked about, most redemption deed auctions are going to use the premium bid method. Essentially, they're going to bid up the price. So this is going to be similar to an eBay auction, any type of auction. They're going to establish the low bid or the minimum bid. And that minimum opening bid is really just going to start at all of the back taxes and the penalties. So, like a tax lien, that's just 1 year. This may be a couple of years worth of back taxes by the time it gets to the actual tax sale. And so that's going to be the opening bid amount. And it's there, and the investors there are going to bid against each other until the high bid has been established. So if we were to look at a $10,000 opening bid and we were to start bidding against it at the auction and it bid up to $20,000, essentially you're going to be paying $20,000 for the property. So it's like a tax deed. You're essentially bidding up the price of the property, just like you would with the tax deed certificate. I mean, with the tax deed. So essentially, it's going to be a completely different bidding method than it would with the taxing certificate. Do you have anything to add about kind of the bidding process, Shade?
No, other than there are advantages as well when you're there because the interest you're paid is generally on, at least in Texas, I believe it's on the full amount of the bid, not necessarily just on the initial opening amount, which could be the case in some places where you're only paid on what that initial amount is. But I think in Texas, I think you're paid on the full amount of the bid. Do you know if
Yeah,
that's right?
yeah, yeah, and that's called the overbid, and it's essentially, you're going to make a 20% and or 25%, penalty off of that total amount that you invested. So it's not just the 10,000; it's essentially going to be the 20,000. Now, in addition with that, um, I can't remember what my point
Well,
was, but
I just something I thought that was kind of interesting too about it is that if you think about it, the what's interesting about redemption deeds is that they basically treat the property in the same way that the tax deed states do, in that they wait out a set time period first before they take possession of the property, but then they go through this foreclosure process on it. And then in addition to that, the the redemption period is almost like this last ditch effort there. And so for the property owner, keep in mind that they've already failed to come up with the money to respond to the amount for a long period of time here, and with an amount that already came up quite a bit due to the time period and the fact that the your past due amount just continues to grow with interest. And so if they couldn't come up with it before, it's going to be much harder to come up with it after the this the sale has taken place and there's additional money that they have to come up with in order to redeem it. It's not something that's inexpensive. So if there wasn't the money there, if there wasn't and I don't even know. A lot of times it's really a matter of how involved the owner is, and either you've got somebody that's involved or you've got somebody that's not. And those that don't have somebody that's involved, they'll end up in foreclosure the same way. The only thing is different is you have that added time period. But yeah, I think there is a reduced chance though of the person coming up with the money because after that length of time, the amount has become quite large, and so
yeah,
I think it's difficult for them to come up with it.
that's funny because that's exactly the exact point that I forgot that I was going to make. Essentially, is that if the property owner didn't think it was worth it to pay the $10,000 for whatever reason. That may be because they don't have it. That may be for whatever reason. It's going to be a lot harder for them to come up with the 20,000 in addition with the penalty on top of it. And so, that's the reason you're going to have such a higher chance of getting property through these redemption deeds than you would through a tax certificate. That's the reason you're going to have a good chance of getting most of the property, is that by that point, there's not only going to have to pay the back taxes, but they're going to also have to pay that additional money that you put into it.
Martin actually also has a really good question, and he's asking, who gets the overbid? Which is a great question, which is actually something that can apply to much more than just Texas, but it can apply to many other places as well, because overbid is common in a lot of states. But the general rule on the overbid is that it is the property of the owner at the time of foreclosure. Okay, so I think legally speaking, that can probably be maybe, in some cases it could be more than one party, but I believe that it's the owner, though, at the time of foreclosure, or whoever owns the majority share in the property. And Steve, I don't know if you have anything to add to that, but I believe that that's the case, that the
Yeah,
overage generally goes to that.
yeah, totally. And that's the kind of the whole idea behind the overage, doing overages is finding those people and connecting with their money and trying to get a piece of the pie. And that's kind of the whole idea behind that overage system. So yeah, it's just going to go back to the property owners or who has interest in the property. It could very well be possible that if there's a mortgage or something like that against the property, that those interested parties could petition to have the money as well, depending on the situation, depending on the individual situation. But it's going to go to whoever is essentially due. The county's not going to keep that money. Essentially, it's kind of that unclaimed funds until the property owner or somebody who had interest in the property applies and takes the money.
Yeah, in fact, what you'll find as you start to gather lists for various, counties and places, if you're looking for their lists, you'll find that they generally have different types of lists available. And if they have a list of lands available, or if they have a list of their tax sales, in some cases they'll also have a list of their excess proceeds, or their overages. Which is essentially the excess money, that they collect, and it just sits on the books for them. And for a long period of time, they don't do anything with it because they don't consider it theirs. It's not theirs, and so it's the property of that owner. It's just a matter of them coming in to claim it. And so I always thought that was interesting, just because every single county that will sell a tax deed for over what the opening bid amount is will have overages, because they're only interested in that opening bid amount. That's it. That's what's owed to them. And so as soon as it gets an initial bid, they're paid off. And so everything above that is basically just going to sit on some records for until the parties come and claim it, which seems kind of crazy, but the counties are so government. They won't necessarily be effective with what they do, but they will do things by the book, which is what they embrace. And so it's interesting how they are, because they're not great at doing things like selling things or advertising things. What they are great at doing, though, is following state laws to a T, which includes keeping that money that's not theirs on the records and waiting for the next property owner. The person that is owed the money to come and collect it. And so
Yeah, they're great at being inefficient. That's for sure.
yeah, it's true. They really are in some ways, but they're getting smarter. I think it seems like as time goes on, there are more smart counties now than there were in 2000. It seems like.
Oh yeah, yeah. Counties are definitely getting smarter, and it's part of it's because they need the funds so much more. As things are tightening and as budgets are expanding and everything like that, they need this property tax money more than ever before. Now, when you start bidding on redemption deeds, as we mentioned before, you're going to have a lot higher chance of getting the property. So the due diligence that's needed for a redemption needs to be exactly similar to a tax deed. You need to essentially do the due diligence like you're buying the property because good chance you are. You're going to have at least a lot higher chance of getting that property. And so is when we talk about due diligence with redemption deeds, you're going to go through that same entire process of doing a comparative market analysis, determining what the property value is, determining what your exit strategy is, and go into it even if there is a 6 month or a year redemption period that you're going to have to wait because you're going to be paying out a lot more money. You're not just paying 1 year's back taxes and sitting back and waiting for a couple of years. You're essentially putting a lot larger amount of money towards this property, paying off all the back taxes, including any overbid, and then essentially sitting for that year period or 6 months or whatever it is to determine what your strategy is. And so especially if you're looking at a state like Texas, you'll have ownership rights during that time frame, which means that you could rent out the property, you could live in the property. You're just not going to want to put a bunch of money into the property unless until that redemption period is passed, essentially. There's certain things like basic upkeep and things like that essentially you might be able to pay back if the property owner tries to redeem the property in some situations, but you're not going to put a ton of money into it because that property owner still has that time frame to pay back. Shay, do you want to talk about kind of how the penalties work with redemption deeds?
Yeah, yeah. With tax liens and most everything else, we're always dealing with a normal interest rate that accrues on a month-to-month basis. And so the way that most tax liens treat it, they basically will treat any portion of a month as a whole month. So, they deal with it like 30 days at a time, and as soon as it breaks into that next portion of a month, they count that as a whole month. And what that's doing is it's accruing interest. So if it's 18% and you break that down over 12 months and you have your percentage of it's 12%, then you've got 1% per month, 18%, 1.5% per month. And it accrues there, meaning that the redemption value of the lien just continues to rise. With penalty rates and redemption deeds, they're totally different because it's just a flat rate that doesn't depend on time. It's a flat rate, so if redemption were to occur right after the lien was purchased, the deed was purchased, the sooner the better, essentially, for the investor, because it means that they're making that same flat rate amount, for a shorter period of time. So penalty rates can be beneficial in that way because they're not dependent, but it also kind of depends on which end of the spectrum you're on. Whether it's been closer to a shorter amount of time, whether it's been closer to that full year. But either way, 25% annually is pretty good. And like Steve mentioned before, um, with Texas, you've got a 6 month redemption period for most property there, and you've got a 2 year redemption period on what Texas considers homestead property. Which you can read the definition of how Texas, but you're usually looking at things that are owner occupied is kind of the thing that I think of when it comes to homestead properties. I normally think owner occupied. So, which is not a lot of these properties. Rarely ever are we looking at something that's owner occupied. Most of the time, that's not the case. These properties that end up going to auction are usually because of something else. There's not usually somebody in them, and that's the reason why. Or if there is somebody in them, they don't own the property, and so whatever the reason is, there's usually weird circumstances. But that's the main reason why I think penalty rates are appealing to investors, and that they might invest in these redemption deeds just for the penalty rate. And if nothing else, because you also have that chance of getting the property, obviously, just like you would with the deed. But if they do redeem, you're going to come out of that pretty well. I mean, if you were to have something redeemed there within 6 months, and you're going to get 25% on your money, that's kind of a home run in a lot of ways. I mean, for people, if you can earn that kind of money any other way, then surely let us know, because there just aren't that many ways to do it. And if it goes in the case of Texas where you've got these homestead properties, those that have a 2-year redemption period, essentially for those, once it goes beyond that year, you automatically get that 25% for that previous year, and then it basically resets that again for an additional year. So what it means is if it redeems at any point during that second year, that you would get a 50% return on your money, as far as redemption. But if not, obviously, then you would get your property. But that's a long time to wait. 2 years is. So I think it depends on what you're after as an investor. But there is definitely a lot of investors that specialize in the redemption period. The penalty rate in general. That's kind of what they're after in Texas and why they invest in Texas. That's one of the big draws for them, is that flat 25% penalty rate. So, it has that appeal for a lot of places. Anytime you can earn a flat rate of return like that, it dramatically changes what the overall rate of return is once you calculate in and add in time.
Yeah, definitely. And when you're looking at these different states, even in a state like Georgia, for example, which you may have to do a little bit more work as far as finishing up the foreclosure at the end and, doing the final paperwork. Even in a state like that, it gives you the opportunity to invest and sit back for a little while. Even though, like Texas, you can do things with the property, and in Georgia you don't have any ownership, but that still gives you just a year period of time to sit back, and if they redeem after 3 months, you get 20%. If they redeem after a week, you get 20%. If it goes to the end of that year period, you're still going to have a lot higher chance of going through the foreclosure and getting the property, but you're also getting that higher interest rate return either way. And so, there's really a big advantage to being a redemption deed investor if you live in those particular states or you like to invest in those particular states, because of the high return and also the ability to, these shorter redemption periods make it a lot different. If you're looking at a state that has a 3 or 4 year redemption period versus a 1 year or 6 months, that's a huge amount of time. And in fact, if you were to purchase redemption deed today, that would kind of give you a year to decide what you're going to do, to decide what your exit strategy is before you actually start going through that process.
Yeah, I think those are good points. And like we said, it can also take longer than you might think, even standard tax deeds, for the whole transfer process to take place. So, if 2 months or 3 months sounds like a long period of time, keep in mind that it could take that long just to try to get normal deeds.
Yeah.
So,
Yeah, and then
um,
once that redemption period is passed for like Texas, Hawaii, a lot of these, essentially they're just going to finish recording that deed. So at that point, you can sell the property, you can do whatever you want with it. You could even sell the property before that, but you'd have to let people know. Essentially, you'd have to sell that with that being in mind, that you'd sell it essentially as a tax deed if you had to sell it. But really, most investors want to sit on it for that time frame, and then after that time frame, decide what they're going to do.
yeah, I think that one of the general rules about that type of investing is about well, basically understanding the lack of liquidity with your funds. It's being tied to that investment for a set period of time, and you always kind of have to consider that the investment can last not only to that redemption period, but beyond that to a degree. As you're trying to get things completed. It's just always good, I think, to look at the worst case scenario in terms of duration, just because that's one thing that we learned early, was that you couldn't count on any specific time frame when it came to liens, because they were so sporadic in how they redeemed. Some of them were so quick to redeem, sometimes they're not. It depends on so many variables that you just really can't look at or predict and know. So now, I think with regards to the redemption period, we've pretty well talked about everything I think related to redemption periods. They're pretty well like liens in terms of that. And we've talked about everything else. You even talked about that. So let me just move on here, and I'll let you kind of take over here in talking about the 5 states here, which I know we've uh, jumped around on some of these a little bit here, but if you want, you can kind of give them the overview.
Yeah, yes. Essentially, there's 5 states. We used to have 7, but I've kind of narrowed it down today to 5. And really, there's probably 4 of them that we're going to spend most of our time as far as actually investing in, if we're, your general investors. Now, each one of these states, we have a slide on each one of them that we can kind of go through and talk about. But these, Texas, Georgia, Hawaii, and Tennessee, these are going to be the best places for us as investors. One area that we could possibly add to that as well is Louisiana, but they kind of consider Louisiana liens a little bit more now, but they're pretty similar to a redemption deed in a lot of ways as well. But so that's the map. Let's kind of first start with Texas. We've talked mostly about Texas. Let's kind of go over just a couple of the quick points. First of all, there's a 6-month redemption period in Texas for any type of property that's not a homestead property and not farmland. And so, and like Shay talked about homestead, most homestead properties, and it's going to depend on the state homestead laws. Sometimes you go through and get a homestead, or the property becomes a homestead, you get essentially a discount on your property taxes. So some people will go through that process. Even if the property is owner occupied, it may not be a homestead property. To have it be a homestead property, that'll usually go through some type of action through the county. That's going to take an action through, some type of process through the county. So not all properties are going to be homestead properties. So any other property is just going to have a 6-month redemption period, and you're going to make 25% return within that 6 months. If not, then you're going to acquire the property. The other point is Texas has struck off properties, which means they have over the counters. These are tax, these redemption deeds that you can pick up after the auction. So if the county doesn't sell all of the properties, then you can look through these struck off tax deeds and pick and purchase these properties without actually attending the auction. Now also, because Texas has auctions every single month, that means you can always go back to these counties after the auction and see what's sold and see what's currently available. You got anything to add, Shade?
Only one thing, and that is that just to add to what you were saying about uh, the exemption, for what do they call it again? The home
Yeah,
homestead properties. Yeah, they always refer to it as a homestead exemption. Which you'll see a lot of times when you go onto county websites. You'll see instructions for property owners there to apply for the homestead property exemption. So Steve's right in that the people do it to save themselves money in the property taxes they pay, and in addition to that, it also gives them some added protections in terms of foreclosure, losing the property. Gives them that longer time period. And so yeah, I think that's about it though.
Yeah, yeah. The other thing about Texas and what makes it so sweet is the ownership rights. I mean, essentially, the property owner, once that tax deed is finished and the auction's over and the deed has been recorded, you're essentially the property owner. You could, if somebody's in the property, you start the eviction process and evict them out of the property. You could set up a deal with them to rent the property while they're there. I mean, every situation is different, but you're essentially the property owner. So you can do what you would like with that property, once the auction has taken place. And so because of that, that means that in some of these other states, you're going to sit back and wait a year in Georgia. But in Texas, you can start taking immediate action if it's some type of structured property that you can do something. If it's just a piece of land, well, then, you may sit back and wait for 6 months and then start marketing it. But between that time, you can essentially set a plan to start to determine what your exit strategy is going to be for that particular property.
Yeah, in fact, if you want, you go ahead and tell them about Georgia here for a second. I'll be right back here in just a second.
No problem. Georgia isn't as sexy, I guess, as Texas, but I think that it's still a good state. And I've worked with a lot of investors over the years, especially investors that live within Georgia, that have done the tax sales there and been very, very successful at it. Now Georgia's going to be a little bit closer to a tax lien, but it's still going to be put in that redemption deed because it has the penalty and kind of the way that the deed is done. They're going to do a premium bid method, which is going to be like any of these other auctions where you're essentially bidding up the price. Now, Georgia has auctions every single month as well. Now, they don't offer over the counters, and so that's something that's going to be a little bit different. You're essentially going to be at the auction, or you're going to need to attend the auction. Now, a lot of these states will have the ability for somebody to attend the auction for you, a proxy bidder. So if you have somebody within one of these states that live there, or you could even hire a member of the power team or find somebody in your power team if you want to invest in one of these states to attend the auction for you on your behalf. Now, kind of the thing with Georgia is once that redemption period is finished, you're still going to have to finish up the foreclosure process and take it through the rest of the foreclosure. And so, that's going to take a little bit more work, but you are still looking at that 20% penalty. And so in Georgia, you're not going to have as high a chance of getting the property as maybe you would in Texas or in Tennessee, but you're still going to have a pretty good chance. And essentially, you'll just sit back, collect the interest, and if they pay you back, if the property owner pays back in a week, then essentially you're getting back a 20% return. Hawaii is another state. Hawaii doesn't have a ton of properties come up to auction like Texas or Georgia was. They're going to have limited properties, but when they do have properties, it is in Hawaii, and they do have a 1-year redemption period. Essentially, they're going to have two different types of bidding methods. They're going to have premium bid, and they also do seal bids. So they'll have a seal bid auction where essentially you send in bids, and they open up the seal bids, and the high bidder wins the property. So what's nice about a seal bid is that you could actually participate in the auction without going, to the auction if they're doing seal bid auctions. They have their auctions throughout the.
Kind of like that was kind of like the online bidding before online bidding was available, was the sealed bid.
Yeah, that's a good point. And there's still some areas that do it. Alaska, Hawaii are two of the places, and there's still some others out there as well. Now they'll usually have their auctions can be anytime throughout the year. We've seen them kind of focus in the end part of the year and in the summer months. So usually around December and June is when we'll see them. They don't have over-the-counters available, but if you could acquire any property earning a 12% return in Hawaii, and even if you're just sitting back and collecting the interest, that's still a great opportunity, because usually you're looking at properties that through a tax sale that are being sold for anywhere between 10 to 30% of market value. So, that could definitely be a good state to invest into. Tennessee is unique, but Tennessee, I think, has a lot of opportunity. They don't have a real high interest rate. The redemption period's 1 year, but there is a lot of opportunity. And also, Tennessee has recently, some of the counties have started holding their auctions online, which having an online auction suddenly makes this a little bit better investment, because even though the interest rate isn't incredibly high, if you can pick up good properties that are offering a 10% return on a year period and have a good chance of getting some of these properties, it could be a pretty good state to invest into. They also have some counties that will offer over-the-counter as well through what they call their surplus properties or surplus sale. And their auction dates are going to vary. So there's actually auctions that'll be coming up here. It kind of depends on the county. Some counties will have auctions 3 or 4 times a year. Some counties, if they're a smaller county, don't have as many properties, they may only have it once every year or even 2 years. So it's really going to depend on the individual county with how many properties they have come up to available. And last is going to be Connecticut. Connecticut isn't something that I think we're going to really focus a lot of time on, because you're not going to really be able to invest there in most cases. They do have a pretty good interest rate return. They have a short redemption period, but usually most of the sales are going to be purchased through hedge funds. Now they do have some Connecticut deed sales, meaning that they will uh, properties that have gone through the foreclosure process, they will sell them at some deed sales when they were held by the county, or when the county or city had foreclosed on them. So there is Connecticut tax deed sales where you can attend the auction and actually bid on tax deeds. But with their tax and certificates, usually these are going to be purchased by the large hedge funds. Most of them kind of just sell to one particular hedge fund. So they'll sell all of the tax liens within that city or county to a particular hedge fund. So they do have auctions once in a while, but usually they're going to be the tax deed auctions. So as far as redemption deeds, there's going to be different benefits and drawbacks. I think we've covered most of these. Shay, do you have anything to?
No, I think that in terms of, for everybody listening, if you haven't determined what your investment strategy is yet, there are a lot of things that you can take into account. But if you're local to Texas, then yeah, that's what I would be doing if I was local to Texas. The only reason why we haven't pursued it more there is just because you've got to be there at the sales in a lot of cases. But I think that it's a good idea to start in your own backyard if you can. There's always advantages there to be able to do it locally. But if you're not doing it locally, there are still options that are out there, and some of these are a good opportunity. It just kind of depends on your situation and what it is that you're out to do. If that initial time frame is not really an issue, then I think that the redemption deeds offer some fantastic opportunities. They're really great opportunities for investors, and that it's I think good advice to attend some of these auctions if you can, either way, just to see how they work and to get a feel for how tax sales in different areas are conducted, because you'd be amazed. I mean, there's probably 3,000 plus counties or jurisdictions that hold tax sales, and they are all unique in so many different ways that you won't see two that are alike. So I think that without whatever area it is, it's just a matter of kind of getting to know the area that you're working in, and once you go through the process once, trying to duplicate it over and over again.
Yeah, if you live in any of these particular states, Georgia, Tennessee, or have family members or friends or somebody that's residing in that area, the one thing that's nice about most of these areas is they're not going to have online auctions. Now that's not nice as far as us being able to invest into them from anywhere. But for those particular markets, the only competition is going to be the people there at the local sale, which means that if you're there, you're going to have an opportunity to bid on properties with just the local competition. And when it's just the local competition, a lot of times that's where you can pick up some of these incredible deals, because, if they're trying to sell, $300,000 worth of property and there's only $200,000 between the investors there, that means that some properties aren't going to get bid, or going to get low bids or minimum bids. And so you can pick up some of these properties. Anytime you're acquiring a property, even if you're just sitting on it for a year, but you're acquiring that property for 10 to 20 cents on the dollar, and you have an interest in that property, even sitting back on a year, that is an incredible investment. And the chance of you getting that property is going to be pretty high as well. So, a couple of the benefits: a high chance of not redeeming. The buyer can take possession right away. And really, this is a couple of good points. This isn't really a short-term investment. So this isn't an investment that you're going to get a return on within 3 months or 6 months. This is going to be more of a year-long investment. It could take anywhere, depending on the state, could take anywhere between a year and a half for this entire process to take place, for you to go through that redemption period, sell the property, exit, whatever your exit strategy is. It's also going to take more capital because you're essentially bidding up the price of these properties like you would a tax deed. Shay, you got anything, any other points?
Oh, just one thing I was going to add about something we were discussing earlier, in that the live sales and some of the opportunities you get there at these live sales. And the reason why opportunities come up is because you have to remember that the county is not a business. They are not like a privately run business. And so the way they operate is different. For instance, like Steve mentioned in his example, the county can hold a sale and they can have fewer investors there. In other words, there's less money there in investment capital than there is, the number of properties there that they have to offer. So there's going to be a huge number of them that don't get purchased. Well, when counties have something like that come up, I mean, they might have double the number of properties at one tax sale than they will at another, but it's not like they advertise for that like a business would and say, holy cow, blowout sale. Well, what are we going to do? We need to get people out to this sale because we got to sell stuff because we've got way more inventory than we can handle. They don't react like that because, it's a county, and the foreclosure process is just kind of happening, and so they just kind of do their thing the same way every time. And because of that, you're always going to end up with tremendous opportunities whenever you have these live sales where you don't have the online auction. I mean, online auction is almost always going to draw more investors, than you could possibly get at most of your live sales. There might be exceptions to that, but for the most part, that's always going to be the case if you're dealing with a live sale. You're going to have less competition there. So by virtue of that, you're going to have better opportunities. So yeah, I just think that was just something to keep in mind, is that the counties are not businesses. They're not privately run businesses, and so the way they do things is going to be different, and it's going to create more opportunity for people that can look at that and say, oh, hey, there's going to be more over-the-counter opportunities here because of that.
Yeah, yeah, I think that's a great point. I mean, really, for investors that are looking in these particular areas or investing in some of these states, it really is a good opportunity. It's just going to be really a matter of what is your investment strategy. I mean, for the right investor that has money in a self-directed account or something like that, investing in Texas or Georgia or someplace like that where they can do it several times a year and kind of go down and re-up, that could work really well with that type of investor, because they're either getting their interest rate return or that property's going back into their self-directed account, and they're either going to sell it or rent it out or whatever the process is at that point.
If you want, I think I've got some of these pages here pulled up here for a couple of different places. One of the ones that you mentioned here, and if you want, Steve, you can jump in and walk us through this at any point. Let me just switch this over so you can see. Let's see here. There we go. Okay, so that should have switched your view over. If I'm
Yeah,
correct here, right?
yeah, it looks pretty good. So essentially, we're just looking at a couple of the upcoming auctions, and you know, in Tennessee, and we noticed that Civic Source is now actually offering some Tennessee counties as well. So that gives us as investors an opportunity to participate in one of these type of sales that we may not normally otherwise participate in. Now, if we go,
Yeah, in fact, they've got a couple of different sales. I was just going to note that as I was looking, they classify them differently, and so depending on what you're looking for, what they describe here as a tax certificate, I think is essentially what a redemption deed is. And then they have their tax deeds here in the middle, and then kind of their tax liens here on the far right. At least that was how I perceived it.
yeah, yeah, and essentially Shelby County just had an auction to take place a a couple of weeks ago, and then also on the Shelby County website, I think they have an auction taking place in April as well. So we can see, they had one on the 21st of this month, and that's this online auction that we saw taking place, and they also have one taking place on the 25th. Now, if we click on that sale for the 25th real quick, I just want to pull up the list, the online list, so everyone can see it. This is the sale taking place in April, on the 25th of April. And we can see that there's, almost over 2,000 properties essentially matching the request. Now, this list, they don't have the opening bid listed right now. They're probably still kind of figuring out what that minimum bid would be. They'll probably wait for another month or two so they have that total amount. But we can get an idea by looking at the last auction of what they are. But we can see the assessment here as well, and we can click on any of these links to pull up the property records. So we can go through and click on these different properties, and we can see the address and click on the link. And this is for a tax sale taking place in Memphis. Now, Memphis is actually has a lot of good things going on in some of the real estate markets there, so it's not actually a bad market to actually look at. So once you click on the thing, it's going to pull up the property information, and so we can see exactly what this property is. It appears to be a single-family home. We could do some more research on it if we were to bid. And so what kind of separates this, a redemption deed from a tax lien in some of these situations is not going to just be 1 year's worth of back taxes. It could be a couple of years worth of back taxes, so that amount's going to be higher. Got anything, Shade?
No, sorry, I'm trying to back up here. Oh, there we go. Okay, I guess let me see here. Because Steve's internet wasn't working quite as well tonight, I'm kind of like navigating the controls here while he talks, and so we're trying to it's like the two people riding the same bike. Yeah, are there any specifically here you want to look at?
Well, essentially, let's go and look at the auction results real quick. So we can see that here's the property that are coming up for sale, and eventually all of those properties will be available on Civic Source. And so if you wanted to participate in this Shelby County tax sale, you'll be able to do it here. But when we were looking at this list of properties that were auctioned, we can see this auction ended February 22nd, and we can click on some of these different properties and see if there was bids or not. It looks like, some of these say no bids. We can actually click on the property to find out more about it. So we can see, this particular property has no bids on it. We could go ahead and check the address if we wanted to. We also have the parcel number, and so we'd go back to the county record and do some more pull up the property record to find out more about these individual properties. But I can't believe how many properties were listed here that didn't have a no, it has no bid. And we can see here, the redemption period 1 year. We can see the high dollar wins. It just has all information about the tax sale. So I was just kind of surprised to see all these properties that didn't have bids on them at all kinds of different price points. And so it's something to keep an eye on at one of the some of the upcoming auctions. We could probably actually go back to the Shelby County and look at some of those different properties that didn't have bids if we go back and look at the other date. But you can see all of these different properties that didn't have
Let's see here if it pulls up here for me. Let me try that again here. Oh. I might be able to make it work here. Let me just grab it again.
But, one thing I noticed as I was going through is there was all kinds of single-family homes, commercial properties. There's lots of different properties that are coming up for auction. Now, the interest rate isn't as high. You are only looking at a 10% interest rate. But, if you're not bidding up the price and you can acquire the property for 10, even if you're only making 10%, but you're, essentially able to pick up the property for just the back taxes or close to it, it could still be a pretty good investment. So you can see on the sell date on the 21st, that'll have some, at least the property links of some of the properties that got auctioned.
Yeah, okay, so it looks like we've got 783 results here. And let's see
Look at
here.
that
Let me
one,
just click
66
on.
Bethel, Memphis, or at least one of the ones with the full address.
Oh, yeah, right there. Okay, so with this property here, I think we're looking at what I have on this for the amount was 6,000. Let's see. So we're looking at this one right here. Whoops. Which 7,100 I think is the assessment value on it. That's the address on it. It's 667 Bethel in Memphis, right?
Yeah,
Now, also something um, when you see an appraisal value of zero, it doesn't always mean that the property is not worth anything. Oftentimes, it's what happens to these as they're sitting on county records or as they're awaiting sale, and the county is doesn't want to be responsible for paying the property taxes themselves. So they basically reduce the assessed value down. Um, unless it's something different here in this case, I'm not sure.
yeah, that's usually gonna be the place. But really, with these kind of properties, we could go through. You can see some of the different links you can click on. But usually what we'll do is just pull up something like Google Maps and just pull up the addresses to get an idea of what these properties are. Sometimes just by doing a quick Google Maps view, we can get a pretty good idea of what the property is, and then from there we can do some more due diligence on it.
Yeah, in fact, for this particular place here, you know what city we're dealing with here? What city is this?
Memphis.
All right, so there we go. There's Memphis, Tennessee, and I don't know why it always turns me around here, and there we go. I think that is the property we're looking at here. Let's see here. That is, yeah, that's 667
Yep.
Bethel. All right, so that's basically the one we're looking at right here. Minimum bid amount. It doesn't tell us the minimum bid amount, but it does tell us just the assessment, right?
Yeah, it doesn't on this list, but if we were to look, if we were on one of the online lists for the auction, it would tell us what that amount would be. And probably the assessed value isn't necessarily the market value. The assessed value is probably going to be, different than the market value. It's just something they're using to essentially evaluate what the property value could be.
Oh, this is interesting. This looks like this one might be some kind of a commercial property. Let's see here. I just clicked on one of the bigger ones I could see here. I think I clicked on the one here for 171,000. And let me just grab that address. Let me get a look here. I don't want to do that. Just pull it up here and we can see. But this one's a. I think this is for that probably that entire building.
When you were just back there a second ago, they had a thing that you could click to find the local property sales, and a lot of these are going to have that with where you'll have the ability to essentially look up uh, local property information or local sales. So what property is sold within the last 6 months, depending on the criteria you set. And so that's a lot of times going to be good information when you're trying to find comparables.
Yeah, yeah. But she's talking about the section right here. Which we could set our we could set our dates here. So if we wanted, we could look from today. Oh, actually, let's go back here. Let's say January 1st to today. And let's say see here if I can get this to work here. What's also you'll find is that you have to be very specific sometimes with county websites. Like for instance, entering in parcel numbers isn't always as simple as you might think. Just because some county websites require you to alter or change the parcel numbers, depending on how they're listed. Let's see here.
And some of these searches are even more detailed, where you can search by, by property type, there's just a lot of different features that some of these counties will have now that makes it a lot easier for us as investors.
Yeah, let's see here. Now, I think that particular property turned out to be, I think, this gas station that we're looking at right here. Let's take a look, though, because there are a lot of properties in all these different range amounts. You can see that you've got a pretty broad range of properties here. Stuff valuing anywhere from $875, as far as the assessed value. And again, like Steve said, we don't really know exactly what that means just yet, what the assessed value means. But it kind of works its way up from there. And so you've got quite a bit of property here.
I wonder if this list corresponds with the online list, with the auction list.
Let's take a look here.
You know what I mean?
Yeah.
251 Virginia is the first one. Oh, there's only 345. So that probably, which tells us that, by the time the properties came to auction, there were 700 properties originally. By the time it came to sell, there was 345. So if we really wanted to figure out how much these properties sold for, we could probably look through the list and find the property on Virginia Avenue and see, okay, here's the opening bid was 7,000, essentially. And we could also use any of these properties and just copy the parcel number and just do a parcel search on any of these properties so we can see what the opening bid amount would have been.
Yeah, in fact, yeah, we can pull it up here pretty easily. Once we're here, we've got the parcel number right here. So we wanted to pull that up. And I think we still have, we can search by parcel number right here. And again, like I mentioned, you would think that it would always be simple, but rarely ever do they make it simple. It's always got to be something else. So the way they have their parcel number listed right here may not necessarily be the way that their system reads it.
Yeah, I'd probably have to put a dash in somewhere or a space.
Yeah, which happens on a regular basis here. But yeah, there are a lot of properties there, and we're finding more and more places, I think, that have some great opportunities. Lots of different states, that we're finding. In fact, the more we dig into places, the more opportunities we find, and that seems to be the case in a lot of different places. So, yeah, I think it's a good idea to start in your own backyard. But if you're not going to invest there, with the internet today and what it's made possible, you can really invest in so many different places without really the need to travel at all. There's a lot you can accomplish today using just the internet.
Yeah, definitely.
Well, I think with that being said here, I think we've run probably about as long as we dare go. We hate to get the recordings too long, otherwise they take up crazy amounts of space here when we let them go much over an hour. But we appreciate everybody coming out and joining us here tonight for the webinar.
Yeah, definitely. And if you have any questions, let us know. We're going through a couple of different changes, but I think there's going to be a lot of opportunity. We're nailing down all of these upcoming auctions. We'll let you guys know about them. And continue emailing you guys information about upcoming auctions and some of the different opportunities that are taking place.
Yeah, and yeah, if anybody has any questions, you're welcome to ask those now. I know we want to leave time towards the end where we can answer questions. So I think a lot of times people ask questions throughout the event. But if anybody has anything at the end here, they want, you can always ask us, and we're happy to answer those. If not, though, you're welcome to email them to us. And also, if you have any suggestions for things you'd like us to cover in one of the upcoming webinars, let us know. We'd be happy to do that. We enjoy doing that. So, Again, we just want to thank everybody that are members on the site, and we thank everybody that joins us for these weekly webinars and watches these. We hope that you enjoy them as much as we like doing them. So, yeah,
Absolutely.
yeah, have a great night, everybody. We'll see you next
We'll,
week.
we'll see you next week.